What's going on, traders? Welcome back to my YouTube channel. This is the first version of this video I'm doing. So this is the second version of this video I'm doing. I did the first one, and I was highly disappointed on myself because and for it, I had the mic connected, yes, my headset mic, external mic, and also the system mic. All of them were just talking at the same time, and the background noise was so loud. I have to record another video now, and then my camera started misbehaving. I don't know what's wrong with this camera, but yeah, I might get a new one soon. This is a webcam, so I might get an external webcam, external camera, GoPro, whatever. That's by the way. So what are we doing today? I told you guys that I'm going to explain how I trade. First of all, this is of my own personal analysis, and it consists of I picked so many terminologies from market structure, and SMC, ICT. I think these are the three places I know I pick my terms from. And then yeah, also SMC and ICT. So when it comes to bloody hell. When it comes to trading in particular, this is how I trade. First of all, let's look at what happened to this week. Since Monday, price has been on the, just say, range bond. Because it refused to break this previous high, refused to break this previous low. It has been on a range bond since. So I hardly look at the one-hour time frame unless if I have something important to check. But I don't use it as a entry time frame. I use it as an overall trend time frame. So that is one thing about the 1 hour time frame. So this video is going to be an educational content. So I'm not going to be doing any essay, any B-roll or something. Just pure raw teaching and what they call it again, teaching and yeah, and just sound. So like you can see, this is a very clean downtrend. It's obvious in everyone's eye that this is a very clean downtrend, and let me look for an uptrend. Oh, this is a very clear uptrend. So market always trends, you understand? But when it's not trending, that is when we tend to lose our money. So what I used to, when I was creating this strategy, let me go to December and let's see if we can find out our entry time frame. Our entry is, first of all, I named three concepts that I use here, which is ICT, SMC, and market structure. What do I mean by market structure? Market structure is when it goes up, down, up, down, up. This is a pure market structure, which is uptrend. Everyone knows it. Then what do I get from ICT? Sorry, SMC. SMC says that I don't know if I'm right about this terminology, about this what they call it, about this let me just use the word term that ICT SMC owns other block, because that's the first place I heard about it. So I don't know who owns it, but where I heard it first is SMC. So that you have to wait for price to come back to another block to take a trade. When I learned about market structure, it's just once price makes a higher low, you take a trade, higher high, higher low. Once it comes back to higher low, maybe 50% of this push, you can start taking a trade. But SMC says take a trade on another block precisely. So next thing I took from ICT is fair value gap. Most times there is a fair value gap inside this pullback. When price pushes up and pulling back, there's always a fair value gap inside that place. You can take trade from that fair value gap, or you can take it from another block. But me, these are the terms I picked from ICT. So let's go to December and see if we can see some trades that we took. I will not be using this month because I want to use a month that has a direction and a month that I traded also. So let's take 15 minutes. 15 minutes time frame, yeah. What do we have here? Okay, let's start from this place. When I was placing this strategy, I told myself, see, the only thing you have is from London and New York close of the previous day to a New York to a New York close of the next day. Once I draw this box, I'll be like, this here is the only information that I should be working with in a single day. Nothing more, nothing less. This is only information I need on a single day. If I'm going to make a $10,000 day, it's in this box. If I'm going to lose a $10,000 day, it's inside this box. So all they have to do, be very, very careful inside this box. Take the best trade you can. Take the best trade you can. I think I will have to watch this video on my own because this is very, very important. Imagine telling someone that this is the only thing that will ruin your life in a single day. So it's very, very funny. So the best thing is just to wait for your perfect entry. I'll start doing it on my live stream, start marking out the box and say that I'm going to take the best trade inside this box. So to make it even more funnier, you're not doing Asian session, you must be sleeping during then. Bring it to the London Open. Boom. It's even more or less. So what we have here, break of structure low, still market structure, lower low, lower high, change of market structure. It has changed. Then if low is coming back, the only thing that we have here is the other block, which is this. The last bearish candle before the bullish move. If you don't know what other block is, you have to stop watching the video and check on YouTube what is another block. Simple. A bullish order block is the last bearish candle before the bullish move. That is the order block that you're going to be using to buy. And a bearish candle is the last bearish candle before the bullish. And a bearish order block is the last bullish candle before the bearish move you're selling with. So this is the other block here. This one, this candle here, is the other block. And then you buy from here. Let's put our buy and sell stuff. You buy from here. Please, I beg you, target only 1:2 hour. I don't know what you might be seeing on the internet. 1:55 hour, 1:100 hour, 1:3 hour, 1:4, but what I do is 1:2. I won't complicate this for you. If you're on a challenge phase and you're using 2% risk, only what you need is 2 trades, 2 good days. You have passed the challenge, and what you need is 5 losses in a row to lose the challenge, or even 4 losses in a row to lose the challenge. So that is how I do my own stuff. I don't target more. 2 hours is okay. So 1:2, boom, we leave. Then coming here, what do we have? First of all, I'll draw this box. Look at the only information we have to work with here. Only this one. Nothing more, nothing less. Nothing more, nothing less. I keep saying nothing more, nothing less. If you're going to be taking a trade, 100 trades is inside this box. So don't make yourself regret why you took 100 trades inside. How many candles do we have here? How many candles? Just 61 bars on 15 minutes time frame. 61 bars. I'm going to be losing a fortune on the 61 bars. Doesn't make sense. So, boom. I'll just draw something like this. Price came down, break the structure. Once what you can classify as a break of structure is a candle break, not a weak break. Candle, it must break with candle and close. Like this one break with candle and close. You must be like, you must wait for you to break with candle and close. You break with candle and close. Boom. Take a long from here. And target your 1:2. But unfortunately, you'll be screwed. either I'll break even on a loss or a loss. So that is it. It is for here. I don't think there's another perfect entry that came out throughout that whole day. What do you have to do? Leave it. Even if another person's entry played out, that's his own. You wait for your own time to come. That's it. Simple. No need of complicating it. Then moving on to the next day. I don't know if you can see any trade here, but I see nothing. It's easy to detect if you don't see any trade. Nothing is here. Mind you, this is for me, not for anybody. I didn't see anything here. That means I didn't see anything here. I don't know if you see anything on your own, you can take a trade. But for me, I didn't see anything. But I remember taking this trade. This is a very nice. I can even put all my live trading on this one. Price break this whole structure high during Asian session. Not Asian, say pre-London open. Break the high with a candle. Break the low with a candle. This is the bearish order block, which is last bullish candle before the bearish move. This one, and then short. Pound. Nice. 1:2 or 1:3 or anywhere. So what I identify as an external liquidity, because I use that term mostly, is if you have a structure like this. These are the things that I recorded in the other video, but due to the mic was misbehaving, I couldn't even post it. Low, high, low, high, low. You take your trade. You're targeting these highs. These highs are your external liquidity. I used to use it. I used to put it EXT LIQ, external liquidity. I think I didn't copy this one from anywhere. So it's from my brain. Like I'm the one that identified this one and named it external liquidity. I don't care if you see it, if I've seen it anywhere, but I'm saying where I saw my own. So external liquidity here. You targeting external liquidity. But if your external liquidity is more than 2R, please leave the external liquidity. Let it stay on its own. You take your 2R and leave. But if you decide to take to go to 3R and 4R and 5R, that's on you. That's not on me. So I will use 50 pips of loss here and 30 pips take profit. 150, 300. Boom. I'm out. I remember taking this trade. Yeah. I don't have the screenshot again. I took this trade. I remember vividly. On 4th December. My friend was like, "Oh, this your strategy is simple. Why are you sharing it freely to people?" I was like, "It's not my strategy. This has been in the market. I just identified it. So I don't have to take any glory for that." But what happened? Price did this. Pow. External liquidity swept. Because it's a previous low. So moving on, I took this trade too. I'm remembering all this trade now. I remember it now. But it wasted my whole day. Let's draw a box. I'll call this box of truth or box of mystery. This inside this box, that is where everything in that day is going to happen. Inside this box. Box of truth, box of mystery. I took this trade here. Then the regular structure came back. I took another one here. I don't know if you see what I'm showing you guys, but I don't know why this is simple for me, But this is very, very simple for me to identify. This is a very shorter block. Price that's breaking the high with this green candle, came back with this red candle. What will happen? Long. So when I was still teaching, I used to tell my students, only what you have in a day is one shot, and you make sure that you make very use of that shot and not taking trades randomly on Okay, yeah, this is it. This trade stressed me, and then later went to my take profit. Yeah. So that is the only entry I came out on that day. Moving on, this day is a no entry day. I am pretty sure. Okay, yeah. I want to discuss about another thing. Okay, 15 minutes already. Once it gets to 20 minutes, I can end this video. I don't like long videos. I can't even watch long videos from someone's channel. Talk more of my own. Yeah. So moving on to here. What about this? What I want to explain again is one price does something like this, breaks this kind of structure, and have this point of interest. It's a very risky point of interest. Because look at when the break of structure happened. It broke this high on 8:45. So 8:45 till 11 in the afternoon, let me just call it mid London. It came back. It is the entry. So it's kind of shady, or I don't like waiting long for price to trigger my entry. I don't like it to be in and out fast. So that's what I want to be explaining about this also. So if you're taking this point of interest, it's going to be a 50-50 chance. You understand? 50-50 chance on the direction and or stop loss. So here, no trade here. And this is Friday. I think this is NFP. Yeah, this is NFP. This is NFP day. I won't be trading either. So Monday, we can't be doing all this thing here, but I'm trying to identify Monday, no trade on Monday, nothing here on Monday. So I want you guys to, if you can backtest it, fine. If you cannot backtest it, that's up to you. But my point has been made, which is showing you guys how I trade and know if you can identify it on your own also. This is very, very simple. Like, this is the most basic strategy that I've ever seen when I started trading. You understand? So when where's my phone? When I started learning how to trade, I had so many I have so many complicated concepts, you understand, on how I should choose my strategy, how I should choose everything. But this one is the most simplest one I've ever seen in my entire life. So that's why I chose it. So I will write down my next video, maybe how to backtest my strategy, or how to, or I will try and know things that will make this thing efficient for you, because you guys need to backtest it and see it yourself. If it works for you, fine. If it is too simple for you, you can look for complicated strategies. If it is too basic to be true, check it out, it's good. If it is too complex to be true, it's still on you. This is where I found peace. It's what I'm going to be doing. So guys, hit the like button, subscribe if you haven't. Until next time, I will repair this camera. Take care.